The US Fed is expected to raise rates at its two-day meeting this week. It starts tonight, in fact. Analysts say conditions are suitable for the rate hike, but it won't be done in one go.
I think the Fed will raise rates, and one of the reasons why is because all the signals are showing that they should. They're seeing inflation pick up. The jobs numbers have done well, including wages have still ticked up even in this last report, which leads to healthy inflation, as well as the volatility in the marketplace is muted, as well as the market being up on the year. We know the Fed is very conscientious of what the market does because they do talk about it in their minutes, including the volatility. So I think they have to raise rates because the market is anticipating it.
Earlier this month, Fed Chair Janet Yellen signaled the Fed was prepared to lift rates as the economy nears full employment and inflation approaches the central bank's 2% goal. Fed watchers are widely expecting an increase of 25 basis points, in keeping with the past two rate hikes in December of 2015 and 2016.
Virtually guaranteed. Even before the jobs report, the odds were extremely high, and this is just the last straw, the nail in the coffin, however you want to say it. They're going to hike. They're actually probably feeling behind the curve, and that they have to do some catch up here. So it's not one and done.
Most agree with that sentiment, that it won't just be one and done. US interest rate futures are pricing in about a 50% chance of another rate hike in June and a total of 3 by the end of the year. All eyes will now be on whether Fed officials indicate willingness for a faster rate of tightening in the coming months.
I don't think the Fed's going to signal a faster speed of rate hikes. First of all, they raised rates in December, and raising rates at this meeting already signals that rate hikes are going to be faster than they were last year, because last year was, a year apart, the rate hikes. So they don't yet know enough to know how the economy is doing.
And it's not just the US economy. Financial analysts Reuters spoke with say the path of rate hikes may be slowed by overseas developments. For instance, surprise election results in Europe, which could roil financial markets.
I think what they'll be looking for is that the Fed is still confident in fiscal policies to take the economy further.
A stronger pace of economic growth could pose a challenge to the Fed's balancing act of also keeping inflation in check and the pace of rate hikes in the coming months. For CCTV, I'm Reuters reporter Jade Barker in New York.